morning, everybody, and welcome to today's episode of Market Check. I am Snorlax. You guys also know me as Tommy. I'm joined by Tucker, Max, and Will's Outlook today. Welcome, guys. We appreciate y'all so much for attending. Make sure to hit that like and subscribe button if you're just now getting in here. I think Max's background might sum up our thoughts, pretty well.
What about my background, Tommy?
Oh man. Tucker's too, but yeah, I mean, we now have FOMC in the review, right? And you're seeing some pretty strong moves, not just from equities, the SPX trading all the way down to 43.60 today, but you're also seeing some really strong moves across the board in yields in the 10-year and the 2. I can't really explain that to you guys. I'm not going to LARP that I'm really great about yields, but fortunately, we do have guys on this panel that are, so we're definitely going to dive into, what the meaningfulness of the moves that we're seeing in those markets and what that kind of entails. But yeah, I mean, Bitcoin's dumping as well. I think the more notable thing about the crypto market today, though, is probably altcoins and Ethereum. ETH in particular, right? Because Ethereum has been, it's the king alt, right? It is the king alt, and it is showing even more weakness than a lot of its own derivatives, right? That spawned as a result of bond resistance. It's okay, Tucker. I bet you just you got the YouTube pulled up, but we're seeing a lot of weakness in ETH and altcoins today, reflective of this kind of risk-off sentiment that we've had ever since Powell spoke yesterday. And to be honest, he was quite hawkish. I want to talk about the implications of what he was talking about yesterday. Interestingly enough, I know people don't like moons and stuff, but there was some like really interesting lunar confluence as he was getting up on the podium, and it actually played out. So I guess Powell is a rock respecter, but we'll see what the coins do as they continue to digest. What Powell said, what yields are doing, what risk is doing. Do we get kind of a small bounce here? Whether that be mechanical from shorts closing or because we're going to see the trend continue. But I think yesterday's FOMC, in addition to how the market has reacted thus far, has painted a pretty strong picture about potentially what risk looks like for the end of September. But would love to get y'all's thoughts on a lot of things. I honestly don't even know where to start, right? Because we had FOMC yesterday. Let's just start with FOMC and kind of how we're interpreting it. We can do that really briefly, and then I want to talk about how that's impacted things in legacy markets today so far, like the yields, the dollar, and even crude oil.
Man. You want me to go?
Yeah, sure. If you explain the significance
I
of yield.
can go in just a minute.
Hang on. Oh, that's the 2-month. Man, I mean, look at that. The significance, we had an extra 50 basis points of hikes or holding interest rates higher for longer, basically, than were priced in. So the equity market had to reprice, and that's exactly what we saw. That was via the dot plot. I mean, Powell was decently hawkish, I'd say, but it was more so the dot plot that caused the sell-off. They reserve the right to hike if they need to. One more hike is priced in this year. But I think overall, I think Powell probably knew this was going to send yields higher. Across the board, you've got the 2-year, you've got the 10-year, you got the 20. I mean, everything's breaking out to the upside. Like everything kind of had this little ceiling, right? I mean, the 2-year had a little ceiling as well. And it's all kind of getting smashed, right? It's all kind of getting broken right now. And you can see if you go back and look through the charts that bad things happen when the 2-year gets above 5%. If we look back even to like March, right? This was March. This was the USDC FUD for crypto, but it was also when all the banks started failing. So I don't know. Bad things happen when the 2 years above 5%, but basically this is just saying people are selling off bonds, right? Not demand for government debt at the moment um, at these rates. So rates need to go higher to find demand, basically, or bonds need to go lower. And we can see that in something like TLT, or just, I mean, if you just look at US 20, yeah, not the yield. I don't want the yield there. Yeah, see, nuking, right? TLT, big gap down, right? I think we're getting close to probably a double bottom on bonds. I mean, or not a double bottom, obviously. We gapped below that, but probably, I mean, I wouldn't be surprised if we kind of hung out here for a little while. I mean, obviously everybody's been tracking the long bond trade for a long time, because it is going to be juicy when it plays out, but I think you just got to give it time, man. I think you just got to give it time. Because obviously as a trader, right, you could say, okay, we're deviating. If we get back, you could call for something like that. But I think the more likely scenario is that we kind of hang out down here for a little while until we start cutting. Now that's the thing. If they're forced to cut prematurely, TLT is going to skyrocket because everybody's going to pile in. But if they're able to keep things where they are and not nuke markets and not have unemployment rise, then I think they're going to be able to hold higher for longer, which I don't know how much more they can sell on TLT. I mean, I think it can go lower for sure, but I think at some point it just becomes kind of a must hold in the portfolio at how devalued it is. But at any rate, I think the cuts are for buying on the bond market. But for now, it's in capitulation. So take that how you will. But that's my thoughts on TLT.
So I'm taking a play right out of Tommy's handbook here, man. I stole the chart. I wanted to show this real quick. So this is the 10-year U.S. 10-year yield over. Basically, that's the black line, and then the orange line at the bottom is the effective federal funds rate. And you can see that it's not uncommon for the 10-year to basically behave like it is, kind of going parabolic or seemingly breaking out, grinding higher as we're at the very tail end of the tightening cycle. You can see the pause, the official Fed pause is marked by these blue lines right here, these blue vertical lines. You can see that, I mean, just goes up right into the very end of it, up into the very end of it. Same thing right over here, up into the very end of it. Happened over here too. So this is not uncommon, right? I think there's a lot of FUD going on right now, and I don't think it's gonna get much better than here, truthfully. Like I do think that, yeah, we can continue to grind higher, but I really think this is sort of like this is peak inverse sentiment. This is peak bear sentiment for bonds. So I'm actually looking to start accumulating, because once we get the pause, things typically start to roll over. We'll see yields begin to front run the pivot a bit, and start to work their way down, and through the pivot, just forget about it. But yeah, I think we're getting to a lull. We're getting to a point where it's just getting outrageous. So it can take a while. We could be out into 2024 quite a bit, but yeah, I just don't think it's going to go much crazier than this, truthfully.
Yeah, and if you just plot like 2-year yields against like the S&P or something like that, when the yield starts nuking, that's when you get capitulation in a big way, right? Like I'm gonna pull a Tommy real quick. That's when
Tommy did it one time, and now it's like
I know. I know. Obviously, this is pretty similar to what you just articulated, but when you get up in here, after you exit that area, it's kind of like the yield curve, right? After you come out of it on inversion, right? It's the same thing. Once you exit this upper echelon around 5% on the 2 year, it's usually completely over. So, we're like, look, here's where we are now, right? Here's where we are now. It's just once, I mean, you can hang out up here for a while, right? Like when we first breached 5, we still had upside, right? But I mean, I would contend that these stabs at the high could be interpreted as similar to these, right? And then we got one last push and then we nuked, right? I mean, is that what's happening? I don't know. I don't want to say. I think it's too early to say, but um, we all know what happens when these yields start nuking. The market follows in kind. So something to keep an eye on for sure.
Yeah, let's talk about crypto a little bit.
Before we switch subjects, I'd like to touch on the two and oil and stuff like that.
Yeah, I want to hear Doctor talk about oil.
So this is kind of my thesis on the 2 year. I think just a lot of people are just really ahead of their skis on this one.
Did you change your chart color, Will?
Bad joke, by the way. No, so this is just different from this one, so that way you can identify the two. But this is my normal chart color, the yellow into the white and the blue. It's just because I like to change the red and the green candle. So because a lot of people when they see red and green, they're just mentally trained, to be like, all right, green buy, red sell. And so I like to switch it up so people get out of that mental state of that whole scenario of red light, green light versus, when it should be backwards.
You should just switch the red and the green then, brother.
Well, I thought about that too, right? But people still want to associate some kind of signal with color. So I eliminated the whole color so they don't have a signal in their brain to tell them what to do. Right. And at that point, you can kind of, this is more on the psychology side of things, which is something we're going to work on with the course. But that way you can kind of separate your emotion from the chart and you can understand directionality versus, did I see a big green candle or a big red candle?
Will, come over to the dark side of light blue and purple.
These are blue. They're outlined with yellow.
I see. All right, never mind.
So when I zoom out,
you got it.
When I zoom out, it appears different. Sorry about my voice; it's really raspy. I'm trying to clear it up a little bit. But let's get into kind of what I see here in this area. I think it's really important, and really I'm just gonna zoom it out. Like there's no point. I can get into the smaller time frames, but this is just the reality of things. This is where we are in the chart. I think a lot of people are anticipating, yields can go higher. Yields can go higher. Look, the higher yields go, the worse this is going to get. I don't think any way systemically that this is okay. I just don't. Right? We've got this move right here on yields up to this 533. This is our 2006. Right? This is when the market started to show issues, and it didn't really show them until the following year, right, in 07. And then in 07, the market was able to identify, something's not looking well. Market does not look good. Usually, I'd say we're right now in 06, right? And then 07. And then after 07, you had your 08, 09, right? 08, arguably, if you looked at it from SPY, and this is why I bought a SPY specifically. If you looked at your price here, your bottom of market was here, right? The bond market continued to sell or continue to buy into that subsequently all the way down. So they continued to push this thing down. We are by far over elevated, right? When it comes to yields on bonds by an extreme amount. Like we have to look at the context. This move caused 08. Look at what we just did. I mean, I can't be any more clear about that. Like, I think we still have time in this, we can call it Goldilocks period, to make money. But I do see another, systemic event potentially, ahead. And I'm not trying to call a black swan, but I am trying to highlight areas in the chart when it comes to yields that where the bond market has signaled, hey, this is not the play. This is not the play.
I think the part that concerns me about this time around is how much higher or further we hiked, relatively speaking, versus '06. Like we hiked significantly further from the lows. That is.
You mean as far as speed? Yeah,
Yeah.
yeah, and I think that's what it caused a lot of this to kind of occur. Now, granted, this was caused by a black swan, so it was an overreaction by the market. But if you look at the trend, does anything look like an overreaction? Does it look like where it went where it was supposed to go? I would say it
No,
looked
it
like,
looks like it's where it's going where it's supposed to go. But my concern here is, are we basically just about to get a really sped up cycle in both equities and crypto because of the pace of the tightening cycle? Will they be forced to cut just as quickly as they hiked?
well,
Is
if
that
they
what we're
do,
facing?
that's what I'm thinking is going to happen here. I think we're going to flat out. Now, I don't think this is going to happen here. Again, I think this is further out. I think like maybe 2025, 2026, we come down, roll up just like we did over here, and then probably puke at some point in a big way, right? And this is the bond market just freaking out. Now, granted, I want to highlight an area because I think like everybody's looking at this like, oh my God, it's over. Look, the bottom ended right in here, right? This is where your bottom ended for markets. Even though the bond market continued to be stupid about it and continued to buy into the bid down to the lows, the bottom ended here. So does the bottom end again here, even though we could bid lower, right, on bonds? And I think that's kind of the context that a lot of people got to keep in the back of their mind. But understand when you're looking at this, there's a lot of risk in this market. Look, you have all of this up here, right? I've highlighted it up here. You don't. This is kind of like, really, I should make this not even green. I should just change the color to red, because the reality is once you start to get up here, this is your no-go zone. Once yields get into this area, it's bad. Now, granted, there's always like this Goldilocks upside, because look, I'll highlight it over here on SPY. Right in here, look. There's your 06. That's where yields start to show weakness. And then over here is your top of market, right? Your top of market's right there. You would have never saw that coming. You would have never saw this coming, because the reality is right here, nobody knew that this thing was just going to freaking roll over, right? And I think this is what a lot of people are not looking at. Well, Michael Burry, yeah. But again, I think he was identifying the same thing I'm identifying. This is not the range to be full risk on, right? It is
Okay,
the range.
Will, let me ask you a question, man. Let me ask you a question then. So I know that you're, at least as of like last week, your official position was, we're probably going to dip in equities, but I'm still expecting the all-time high before we actually go back down and have a recession.
Yep.
Given that we're seeing something like the 2-year already up in this like serious risk off zone, your red box, does that change things for you? Or are you thinking that they cut or do some sort of emergency QE at some point and we see yields drop and then move back up again? Or like, walk me through that.
Let me explain. The QE has already done what it's done. It's actually done more damage than it's helped. They can QE this thing to infinity at a certain point. Once the market goes, it goes. And a lot of people, they don't understand it because they never lived through 08. They never lived through 09. I graduated in like early 2000s. So like I was an adult during
I graduated periods. Middle school, man.
I was an adult during those periods, and I was in the working market. So I saw this firsthand, what it did to the economy. And I'm just telling you, like, when you look at these things over here, like this is your no-go zone. Like I do think I think there's a Goldilocks period, right? I do think there is a Goldilocks period. I think that's what we're in. And it typically ranges in here, right? And this is why, like, I've been bidding, because I think you have a Goldilocks period. It's just 99% of the market is not going to. They're not going to see it, right? They're not going to exit once that Goldilocks plays. Once that all-time high plays on SPY. Once Bitcoin goes to like 80, 90K and everybody's shooting for 100, it never makes it there, right? Like this is the period where everybody gets wrecked, in my perspective, like right in here, because we're basically in here. I think we're here when it comes to markets. I think we're here, and this is the upside. And same thing over here. I think there's a big pullback coming in markets, but I think we're basically here, and we're going to play up to the upside, right? We're going to swing. It's not going to be just a straight up like it has been. A lot of people think it is. It's going to be a rollout into the high and then a rejection at that point. And those of you who think I'm being super bearish here, look, I pointed this out with SPY. Look at all these lows. Boom, boom, boom. I mean, I can go as far back as people want to, right? And go as far back as they want to. These never result in just up only. You get at least your double bottom, possible triple bottom. We've only touched once.
So here's something that I think a lot of people miss, and this is probably the most important part of what you're talking about, Will, is that we're only at 20 likes on this video right now. And that's something that a lot of people overlook consistently. And it's nothing short of a cardinal sin to only have us at 20 likes. So guys, if you are enjoying the stream so far, please consider hitting that thumbs up button for us. It really helps the channel. It really helps the show. And we greatly appreciate your guys' continued support. We got 30 people watching right now. TP1, I think, should be 30. I think it only makes sense. We're already at 27 likes. So you guys you started piling in already. I'll see if we can take some profit here on 30 on the likes. And then we'll reassess. There we go. We just hit 30 likes. So we're going to take a little bit of profit at 30 likes. And we'll see if we can hit 40 later in the show. But guys, thanks so much. Will, back to you. Can't hear you, Will.
Oh, my bad. Yeah. So, thank you guys. Appreciate the likes. But I want to be clear here. Like, look at this, Max. Like this is your period of opportunity. Look at your period of opportunity. Look at your period of wreckage, right? Nobody's going to see that drop. Nobody. Like this was your opportunity zone right here. And
what's the date? What's the date on that? The start of that roll, like that box. Yeah. What's the window on that?
So this is June of 06 and it rolls into September of 07, essentially.
So, right? I mean, that's 14, 15 months, right?
Yeah.
Yeah. Okay. So now, is it possible we could spend 14 or 15 months up here similarly? And that's the case where equities rallied all-time highs and we just don't roll over? So what if we spent 15 more months up here? We go into, I don't know, middle of next year, even like Q3 of next year, potentially. I think it might be quicker than 06. Just again, like we were talking about, the pace of the hikes, I would only imagine translate to, we're going to have to come down just as quick as we went up,
Well, the down just as quick as we went up makes sense, but the float could happen by the liquidity that was injected, right? So this could actually extend beyond the 14, 15 months. Maybe it's the next couple of years. But the whole point is that a big short is coming. I don't think people are wrong on that. I think that just people are really early. They're over here, right?
All right, but do this. So that's exactly what I wanted to say. So imagine, so that started in June of 2006. That was the first part of your box. Go to the S&P 500 and draw a box in June of 2006.
June of 2006 is right here.
Yeah, so I'm saying if you started shorting too early, look what happened. That's a huge rally. So if you went risk off too early, you
missed out on the meat of the move.
That was the parabolic part of that move. That was the blow off top before
31%.
And I still think we're going to get that, by the way. I think we're going to dip probably through October. That's been my base case the past few weeks, has been that we're going to have some turbulence from now through October. But that's probably a dip for bidding into a Q4 rally, and then from there I'll reassess. But I don't know if there's going to be like some big event right now necessarily. There could be, but I think your example of 2006, 2007 is perfect. Look how long rates remained elevated up there before something really, really snapped.
It takes a while for financial institutions to feel the pain of these higher interest rates. And I keep on telling people, and people keep on saying, well, something's going to snap. Something. It's not something. The biggest things that get affected by interest rates are banks. They're financial institutions. It will be the financial institution market that will be getting, crushed by these rates. They can't compete. People don't understand. Banks make money off yield. You can't yield if nobody's willing to give you their money. You see what I'm saying? Everybody's all in on stocks. Everybody's all in on bonds. Everybody's all in on different markets. The banks do not have liquidity. They're not able to create yield. And I know some people will be like, well, they can print. No, they can't. You can't just print fictitiously for no reason. You can only print in emergencies, and you can print when you're able to, when stated by the Fed. The Fed controls the banking system at the end of the day. Well, the banks control the Fed, but the Fed also controls the bank. It's kind of a circular situation, I will say, with that. But yeah, I think when you look at this, it's very very indicative of a market that's not willing to accept reality. But I mean, we'll see how it plays at the end of the day. Again, I think this is kind of your red flag zone. This is your risk off, and this is why Burry made it. This is why Burry did what he did. Right? He was able to identify these trends. He was able to identify what was going on up here, and he took the play. Now, the other red flag that I'm seeing, because I don't want to just use one metric, I like to look at different things. I do think there's time. I think there's time. It is oil, right? And if anybody's in the chat, if you followed me for a long time, I have not changed this chart since 2021. This thing has been on point. It has been on point. I thought it was going to roll over, right? I thought it was going to roll over here. I thought I was wrong. No. Oil is literally playing to a T to the highs, right? To a freaking T. And the anticipation was a recapture. Just so the audience knows, this wasn't a guess. It was a recapture of the highs, right? That's what I was looking for. I was looking for them to come back up, recapture the highs on oil, and then roll the market over. And lo and behold, we bounced, right? We got above our B zone over here, and now we are above what I would consider any type of resistance. I don't see any real resistance here on oil. You are above that. You are well above that. Like, you have a little bit probably here, but like, hey, where is it going to go from here? These are massive moves on oil. Now, inflation is coming down. But what this is going to do, I do want to be clear about that, is this is going to actually slow inflation from coming down, which, again, adds into the higher for longer. And a lot of people aren't thinking about that, right? Higher for longer is bad on institutions. It's bad on financial institutions. The longer rates stay at the where they are, these financial institutions can't compete. And if they can't compete, they can't make money. And if they can't make money, eventually they collapse. And that's banks, right? The banks will feel this pain. So oil is going to keep inflation where it's at. Even though it was coming down, I think we're going to. So let's look at it like this. Let's say inflation's coming down. Well, now inflation is going to do this. It's going to flatline. Even if it doesn't go up. And so their 2% target can't be reached because it's down here. And so since they can't reach their 2% target, we stay higher for longer. And then eventually, financial institution collapse, Bank of America, we bail them out. But by the time you bailed them out, the market started doing this.
Yeah, man. I mean, I could see it for sure. I think we're going to go through a prolonged period of these waves of inflation. I mean, maybe only one more, maybe two more. I don't really know. That's a really long ways out, but I mean, I think with oil climbing up the way that it is, it's hard not to imagine that we're going to get some sticky prints here in the not so distant future. But I do want to talk about crypto a little bit as we're about halfway through the show. Tommy and Tucker, man, what are you guys seeing in the crypto markets?
Tell me, go ahead.
I'm seeing risk, carnage. Well, not carnage, but it's kind of a lot of assets, I would say, are dwelling on a cliff, and risk, especially within the crypto market. On-chain has been bleeding for weeks. Altcoins, they look weak, but what really concerns me is that Ethereum is outpacing a lot of its own derivatives, right? Like some of DeFi, some of these other L1s and L2s. Ethereum is leading them to the downside, and so does BNB, right? I think both of those assets basically look ready for downside continuation in the near future, and that's obviously going to spell some big problems for the altcoin market. Whenever Bitcoin decides to go, that's kind of up to Bitcoin, but altcoins look very bearish to me.
Yeah, man. Where is Evan Casey, man?
I know.
He said he was coming yesterday.
I do these microstructure setups just for him.
And we tried to get him on during the most bullish show. I mean, it'd be unfair to him to bring him up today.
There's nothing better than when Evan Casey is live trading while we're speaking.
Dude, that's what happened. Is we wanted him to come on the show and then he disappeared. We should have never tried to get him.
He'd watch tomorrow. He said he'd watch.
Max, I told you, name the next show. Where is Evan Casey? We need to do this. We need to do this. Look, we just need to name one of them.
Where are
Evan broke up with the boys? It's sad.
Where are now?
Just one show, Max. Just one show. Where is that?
Let's FUD ETH BTC a bit, man. That's always fun.
I love doing that. Yeah.
Channel our inner Ben Cohen.
He said I love
Cohen.
Yeah. So clearly this is going negative. No, I'm just kidding.
Clearly it's a bad time to be an ETH, man.
Tucker, can you draw a horizontal line at like 0.04, give or take that previous consolidation?
0.04 is
like that, like those wicks right in there, You could go further. Yeah, like that. That would make a whole lot of sense to me. But at the same time, I think that if we go down there, I don't know if ETH recovers so quickly from a move down there, unless it's a flash crash.
Yeah.
How much likelihood do we attach to ETH BTC being bottomed at the previous consolidation that it formed in summer of last year? Yeah, something like that, Tucker. And it doesn't. Oh, okay. Well,
no bounce.
Okay, so, no bounce. So I mean that. Can you draw like a rectangle from the 2022 low? The summer low, right around there. Yeah, and just draw it over to the right. Maybe up a little bit more too, like bring it higher. So I'm thinking, like, how much likelihood do we attach to that being the ETH BTC bottom? And I'm not saying it's immediate recovery on USD prices, not at all. ETH USD and BTC USD could certainly still bleed significantly from here. But I'm just saying in regards to this pair, how likely do we think a bottom somewhere around there is, and we don't actually go on to make a low beyond that? Feel free to FUD if you'd like. I don't care. That's what we're doing.
I mean,
I don't think that's going to stop at the red box. I'm going to be honest. That
looks like it wants to trend hard, man.
That is what you want a slow grind into resistance to look like.
Yeah, that's gonna snap out fast.
I mean, this looks like it wants to literally God candle.
I think you'll catch resistance where he has the red box, but I think you'll just pull back into another breakout, to be honest.
Bro, that chart looks like the SEC is about to go after the ETH Foundation, man. That is one of the ugliest charts I've ever seen.
Yeah. Yeah, I don't think he really stopped there fully.
I'm torn about if I think it's going to be a controlled sell or if it's going to be like the first leg could be extremely rapid. Kind of like what we saw at the end of last spring. I think the first leg's going to be pretty rapid, and then after that, it'll probably just kind of bleed and chop down.
I think
if we do get a flash crash down on it, and it's something like we saw last summer, I think it would recover pretty quickly. I think the worst thing is a slow bleed, truthfully. So I think if we continue to do this for like another year, it's over for ETH, man.
Yeah.
You think we're gonna like V bounce out of that?
I think if we drop down, and if you did something like what we did last summer and we nuke down, I think we're gonna V recover out of that. But I think if we slow grind, chop, bleed like this, it's completely over for ETH.
Well, I think it depends on what
happens to rip it off like a Band-Aid.
I think it depends on what Bitcoin's doing, right? Like if ETH Bitcoin is bleeding while all of crypto USD is bleeding through here, and then it's like, and then Bitcoin starts running and it goes sideways and maybe dumps. Like I think if we're on the upswing and ETH Bitcoin is bleeding, then at the rotation moment, it probably V recovers. But if it's all a downtrend in USD terms, I think it takes a lot longer.
Yeah.
You know what I mean?
So, I do. What are we thinking Bitcoin does here? Because I was seeing this morning, open interest was climbing on the drop, but funding was also positive across the board. So are we interpreting this as people are longing this dip aggressively right now? It's probably more a question for Tommy.
I don't know if it's necessarily longs. I mean, sellers have been pretty aggressive today too, but I would say pretty definitively that we have not flushed any meaningful open interest from the market. And you can look at Coinalyze right now and you can see that.
It's actually quite the opposite. We've actually been adding a significant amount of OI this morning. But of course, if it's, is it people shorting into these lows or not? I don't know. I don't see a ton of aggressive shorts here quite yet.
I have the most controversial chart in crypto right now.
Oh man.
Oh dear.
Hang on. Look. Like all of this.
Sure about that, Will? I've got some pretty controversial ones.
It's
in my
I'm gonna get some flack for this one.
Look at this. All of this OI came in above 26.6, 26.7 almost, right?
Oh,
like I'm sure some of it is shorts, but most of it's probably longs. Wow. Over Evan Casey. Wow. Overlay Fed funds to the Dow. Historically, we pumped for months. After pause, this time would be different if we crash.
I got to run, guys. But
wait, you want to show your controversial chart?
We could just flash it real quick. It's fine.
Is that Caspa and Luna?
Oh man.
Oh my. Well, I don't know, man. What would cause something?
I called this top right here, man. Look. It's not about what will cause it. It's about the trend.
I'm not going to say the gas was going to zero, but damn, the chart looks similar.
I mean, Luna didn't go to zero. Just saying.
Yes, it did.
Hang on. I don't own any Caspa. Okay, and I didn't own any Luna, but I'm saying there's not. You found a bearish pattern and it happened to go to zero. There's plenty of charts that have done that.
I didn't say it was going to zero. I didn't say that. I drew my.
You didn't have to say it. You presented my support.
I'm just saying
you need a fundamental. You need a fundamental catalyst to go to zero.
Yeah, it's called rugging the liquidity.
No. No.
I think it's going down from here, but I don't think it's going to do a Luna, man.
But here's the thing. Look, my support right there. What do you think of that?
0.0115.
I like it. I like your support.
Yeah.
All right, there you go. I'm just stating the pattern is the same, right? I know people look at this and are like, "Oh, you're saying it's going to zero," but really the reality is I was looking for support here too.
Well,
it just kind of blew through that.
One's what, a rising wedge, and one's just an uptrend.
The entire liquidity was a rising wedge.
I want to say that Luna printed a very similar pattern to that in its first like real cycle when it traded to 23 and then back down to 3. It printed like the same pattern. So
yeah, I'm looking more at this. You got a high, you got a slightly higher high, and you got another high, right? And they're all kind of resisting in the same liquidity zone. And then you've also got a bear trend on volume, right? Or we'll say strength. Your strength. So your buyers are not stepping in. Your buyers are actually reducing their positions. You're coming into the resistance as we speak, right? You're very close to it, and you'll probably reject off it. And if you reject off it again, that's just you coming back up, touching this high, and rolling out. And this rising channel basically does what it's supposed to do, and that's go bearish. That's how rising channels work. We're not able to exceed this midline. It's over.
I mean, the Caspa community is really strong, and I actually think Caspa is going to be a really, really strong performer next cycle. But a lot of them are convinced that it's a new paradigm, and Caspa can continue to just journey on and do its own thing if broader market conditions begin to seriously deteriorate. I'm not convinced of a paradigm like that. So
what do we call that, Max?
What do we call that?
What do we call a paradigm?
I usually just call it a paradigm. I don't know.
I call it conditioning. Market makers condition you, right? They get you to believe. And then once you believe, then they take it all away. This is exactly what happened in 2021 to many, many coins that are down 99x right now.
I'm glad you're not a market maker, Will.
Speaking of coins that are getting destroyed.
Oh, dude, I would do it all day.
ETH is doing nice. I've been in this OP short for so long, guys. And it's finally, I'm just beginning just meat grindered up here, man. Just chummed.
The winter mute liquidity providing.
Yeah.
All right, guys, I'm out. I'll see you.
See you, Will.
All right, see you, Will.
Yeah, man, this has been a tedious trade to hold, man. Like, I'm up, I'm down, up, down, up, down, up, down. Finally, rug. It's been doing nothing, man. What a piece of crap. What a piece of crap.
Where's that TP, Max? Yeah, there it is.
87 cents. Yeah, it's conservatively 87 cents. I actually think we could maybe go down and take out some of this liquidity down here. This would be down at like 75. But I mean, I'll probably be out, man. I could barely even get into this position. It's so illiquid. I've never had to scale into a position like this before, where I was throwing like micro clips at it. And every time I would like slowly limit or mark it in, I would move the price significantly. I'm talking small orders. So I'm a little worried about getting out of this thing when the time is right, because I'm going to cause like a 50% wick by myself. So I don't know. I'm going to have to slowly scale out of it. I'm worried if I tried to close my position now, it would probably take me back up to my entry. So.
What have you been thinking? Are you still in Curve?
Dude, I don't want to talk about it.
You don't want to talk about Curve?
So I threw on some Curve this morning, and I got hunted. So I'm still in it. Because I was in with a really small size.
You got hunted immediately.
Immediately, dude. I literally felt like there was someone on my shoulder, and I pressed the button, and within 5 seconds, a bear squeeze started, and nothing else moved but Curve. So I was getting hunt. They're still hunting me, but what they don't know is that I'm in with very small size, and they'd have to take this thing 50% higher to take me out. So good luck with the hunt. But yeah, man, that was really annoying. Like I couldn't believe it, man. The second I purchased, the second I went in, immediately hunted. Let's take a look at it. It's actually kind of funny.
It has been I mean, look at that chop range. That has just been, that's a meat grinder right there. They're clearly taking people out for a huge move.
Okay, this right here. So I shorted this candle. This was me. And then immediately short squeezes, right? And I went in with super, super small size. I told everyone, I was like, don't don't think this is like a good play here. It's because I'm up on OP and ETH, and I want the screenshot of taking curve to zero if this is going to be the sell. This isn't actually a good trade, but within seconds a short squeeze started. So yeah, it's complete. It's a complete meat grinder. But yeah, I don't know. I mean, I'm not even really annoyed just because it's such like small size, but I would like it to turn around here. I would think that it should. So I don't know. I mean, if it's the only thing that's green today, look at the watch list, man. It's a complete joke. Everything is down. Everything is red. This is a pair right here. But everything is down, man, and curve is somehow green. It was red, and then I opened up a short, and immediately they started hunting me. So I don't really even know what to think about it.
I bet they are selling ETH to protect curve. That is a thought.
That is a good
thing I'm
thought.
short ETH then.
I mean, I think ETH looks terrible, so I definitely wouldn't be. Maybe you catch a squeeze if you long it, but like I would not be advocating for buying ETH here.
No, this looks scary, man. And we just lost the value area low right here.
What looks scary on ETH is if you zoom way out, in my opinion. Like a Will's Outlook type of timeline, weekly and like a daily, they look terrible.
You talking about this, Tommy?
Yeah. And even if you just look at that entire ETH chart without log on, it looks like it's about to mark down from a distribution range.
Yeah, this is tough to stomach right here, man. This is why I'm not. I mean, I couldn't think about longing any alts or anything right here, man. Even if they want to try to squeeze them, it's just, what are you really talking about here, man? What do you really think's about to happen? And on top of that, we had a little order block here, a little 2-day. This is just an egg McStuffin right here.
The fact that they create the equal highs is pretty concerning at 1660.
Yeah, right here.
Yeah.
It's bearish, man. I really think that the most comparable spot on the chart, and I've talked about this, is right over here. I think we're right here. May, June. Let's take a look at the Bybit chart. Let me remove my.
Oh man.
Hang on, boys. Save this as trade.
Which one of you has YouTube running right now?
Not me.
Max.
Why?
Because I can hear myself talking.
No, it's on mute. It's on mute.
Okay. Hello. All right, we're good.
Yeah, no, it's on mute. Don't worry. But I think that this. What?
I know. Evan Casey, man.
There is no second best, man.
No, there isn't.
Yeah, I would say the weakness of Ethereum in this range reminds me a lot of the weakness in that range. But looking at that range in hindsight, I mean, that I didn't even realize how horrendous that looked the entire time. But
and this is interesting, how we've been, moving down like this. And Bitcoin actually didn't do that. Bitcoin actually performed a little bit better. Let's pull up Bitcoin now. Wait, what the heck?
What, in that June of 22 range?
Yeah, so it's very similar. So if we look at this, this range over here, and then you look at Bitcoin during that same time, you can see that Bitcoin actually went on to make some new highs here, and ETH never did. And we're doing something very, very similar, right where we're currently at. So this is the difference right here. You can see Bitcoin during this time performed well. ETH was just continually bleeding. Let's move over here now. Check out where we're currently at. Seeing something very, very similar where ETH is really just not doing too much, but Bitcoin has actually gone on to, in my opinion, I don't know where you'd want to maybe call this, right? But you can see that ETH never got above this high. Bitcoin did easily. So it's very, very similar to what we saw in May and June. It can take a little bit of time to roll over, but things look weak, man. Things look really, really weak.
Yeah. I think as long as Ethereum and BNB look so weak, it's going to be difficult to justify a rally, even if Bitcoin manages to catch, another squeeze. It'll probably be perps driven at this point, but yeah, no, I mean, BNB and ETH looking like this are just not very indicative of a healthy market at all.
No.
I want to look at the euro, man. I want to look at the euro because Evan Casey's trading the euro, so we should probably look at it. This isn't the euro. Evan Casey, here's your scalp short, by the way, NFA. But anyway, what did we have drawn on the euro? I mean, you're bouncing where you should, but you gotta consider, man. You gotta consider the Dixie. It's either here or it's much higher. I mean, this is kind of wild. We haven't had a red weekly on the Dixie in a long time. But I don't know. I mean, this is your spot. I see why you'd want to take the euro long, Casey. I see it. But I don't know. It just looks, I mean, you're in a downtrend, right? Chances are you're going to continue the downtrend. You're in an uptrend. Momentum says you continue uptrending, right? Trying to catch the reversal is not an easy thing to do. Obviously, you're putting in a doji at resistance, like I understand, right? I get it, but this is a pretty strong trend. So I will say that trying to fade momentum is a difficult thing to do, but yeah. What do you think?
We have some fundamental things kind of driving momentum for the dollar right now, like oil and obviously there's a big meeting with the BOJ tonight, right?
Yeah, and it's what I think somebody on our space, it might have been Will on our spaces yesterday. Our Fed is going to out-hawk every other Fed, and there's no question about it. Like, we've already seen Poland start cutting. Like, that is bullish for the dollar. All these other central banks are going to probably start cutting before us. We have the luxury of being able to hold higher for longer for now, right? For now. But I think we have much more bandwidth to do that than do these other central banks. So that is bullish for the dollar and bearish for risk, right? So I don't know. I mean, long the euro at your own peril. I mean, I think it's sitting on support, but there's only so many times you can test support before it gives out. But yeah, definitely some fundamental factors as well.
I think I cut you off on accident while you were trying to say something, Tucker, right before we were talking about the dollar a little bit more.
Wait, did you hear what I just ranted for like 3 minutes?
Yeah.
Oh, okay. I don't know.
I didn't know if you were trying to bring something else right before I started.
No, I think I cut you off. You were gonna say something.
Oh no, I'm good.
Why are you guys fighting? I just came back. You guys were fighting.
Tommy stole my chart again.
Oh, classic Tommy.
Oh, I'm kidding.
There's
Max. What do you think about the dollar and the euro?
Dude, I'm not expecting EXY to turn around until 107, probably 108. I want that monthly inefficiency tagged on DXY. So, I mean, it's in a strong uptrend, whether it's manipulated or mechanical. Like, say what you want about it. It's in a do not fade type of uptrend right now, but it also is presenting a pattern, which is potentially the stairs up, elevator down pattern. So, yeah, I think I wouldn't fade it for a little bit here, man. I think there's going to be plenty of time to fade DXY, and I don't think it's here. Tucker, did we tag your Bitcoin short level?
Oh yeah, Casey, there it is. Look at that,
Did it hit?
man. Look at that. Oh yeah, we caught the wick. Haven't gotten stopped. Take it down. Take it down to 26,380, Casey. You know what to do, brother.
Nuke it, Evan.
You know what area I think should serve as resistance for the structure to remain bearish is probably that that consolidation we put in right after our first BART, September 18th through the 19th. That little bottom we had. Yeah, that.
Yeah,
a little bit further. Not
like
further.
This
back.
one after the BART
Should be resistance if we're going to remain bearish, in my opinion. Given that we used it as support, right? We had a lot of longs come in from there.
yeah.
Yeah.
But
Yep, I agree.
I don't know.
I don't think we should go much higher than here, truthfully.
I
Probably
think
right
the only
there.
thing that's capable of squeezing really is Bitcoin. You know, maybe
Yeah.
can return
And
to
apparently curve as well. So
curve too.
curve is an extremely valuable token, so there's a lot of demand at this level. Clearly,
I like a short here with a stop above these highs, honestly. I
On
like
what?
it.
Curve?
On corn.
no.
Oh.
Like
What does coin look like?
Oh, I didn't even think about that today. I bet it's getting smacked.
It's really not down that much.
No,
No. It's down
Tucker.
3%, but for its beta, that's not a huge amount.
Yeah.
25K before 26.8. Wait, what? Am I lagging?
A little bit.
Oh, damn. Coin. You guys want coin?
Let's do it.
If we close this 4 hour on Bitcoin like this, I think we're just going to go straight down on the next open.
I definitely think
If it closes like this,
lower again.
I think we'll backfill that wick.
I just think given the way Bitcoin came into support, if you're bearish, it should just not really bounce very much.
Yeah.
I definitely want to close below these wicks. Under these would be better, but yeah. I mean, can you imagine if we did something like this?
Wow. Yeah. That would be some of the most annoying price action. Dude, I can't take another range. Please, no.
I don't know that I think that makes sense at this point.
No, it definitely doesn't.
I kind of expect momentum to either play out within the next like week or so, or at least like for another leg, or it's gonna reverse here and go for the highs again.
We already did. Yeah, I agree with that. We already did all that chop, man. We like there's no reason to do that again. This is the time for expansion, not more ranging and chop. Look at that, Tucker. That a boy.
Look at that.
Hammer that pocket. That a boy.
Look at that.
There is no second best.
There is no second best, Evan. I hope you heeded. I hope you heeded.
The part
Is that The Office where they're like heated?
Yeah. All right, guys, we are 1 like away from 40 likes. If there is somebody out there watching this stream right now and you are enjoying the content, the banter, and the discussion, please consider taking one brief moment and hitting that thumbs up button for us. It really does wonders for the channel. And thank you guys for the continued support. We are at 39 likes. We got 35 people watching. I bet there's somebody out there who's enjoying the stream. There we go. Thank you guys for 40 likes. A full TP on the live stream. Very nice. Right at the 1 hour mark, too. You guys are great. Absolutely great.
We're gonna get some messery around this 4 hour close and open, I bet.
I'm telling you, man, if we close the 4 hour, like that, we'll backfill that wick. I think we'll backfill that wick.
Why does it?
Because they tried to run it back up and save it, and it's not worked so far. So
no, it hasn't
they can
worked.
still save it. We got a little time. We got a few minutes, but in a strong downtrend / distribution like this, when you finally start breaking structure with a 4 hour, more times than not, it'll just go back down to filling that low at a minimum. So I like this trade, Tucker. I mean, your invalidation's a little tighter than I'm used to, but I like it.
Yeah, just right above these highs, man.
Let's look at the SPX.
Spoos. All right.
Let's look at Spoos.
I had to scroll the chart down.
I want to point out how underwhelming this bounce is.
Oh man. I mean, I'm sure they'll bounce it here soon. Like they'll fill this gap, but it looks pretty terrible.
I thought it was funny yesterday how as soon as Powell started speaking, the VIX just immediately like green dildoed up a whole basis point.
Dude, they were selling vol going into Powell. Remember the day before?
Yeah, they were selling volatility at 4-year lows on on the VIX into
the day before. Such a dumb strategy, man. So ballsy or just dumb. I don't even know which one. Maybe both.
All right. Look at the VIX, man. Wow. VIX here, SPY here, Bitcoin, Dixie. That's all you need.
VIX has had a strong bid all day.
Mm-hmm.
Yeah.
Even had a dip this morning that just got snatched back up.
Where is this line from? Oh, what a snipe short if you took that. Wow.
What, on the dollar?
Yeah. From these.
Dollar. You don't short the dollar right now, man. I don't. Maybe low time. What are we on, the 1 hour? Okay.
No, look at that. Look at that. That would have been a sniper short. But
yeah.
No, you don't short the dollar right now.
It's just such a clear mechanical bid, man. I have no interest in trying to step in front of something like that.
Evan wants Fed funds overlaid with what? SPY? We've done it, brother. We've done it.
We did that in the beginning of the show. We'll do it. We'll do it again tomorrow.
Yeah.
Again tomorrow. Tucker, I want that weekly gap filled right there, man. Somewhere around. Yeah, or like even a little above it. But yeah, that's the general region. I want that level because if we nuke down there, man, everyone's going to be losing their damn minds. And I think you might have the opportunity to shove. But also at the same time, man, this looks like a really nasty complacency shoulder. That's just starting. Like the neckline hasn't even broken yet.
You know what else looks like a complacency shoulder is this.
It looks
the whole
so bad.
thing.
It looks so bad.
I know.
But it's looked bad before. This would be like our first serious pullback this year. That's how crazy this year is.
Man, I wonder.
Look what Evan's saying, man. This pullback is a scare. Don't fall for it. We will still rocket for weeks or months. rocket. Evan, never change.
Yeah, man.
All right, 4 hour close, Tucker. We just got it.
No way. I want to know what Evan's doing. Okay.
4-hour, man. I'm telling you, it's probably more likely that we come back and fill in that wick now. That was a pretty weak 4-hour close. They tried to save it, but they didn't get it to run up nearly close enough to the open.
Yeah, no, you still closed under all this.
Yeah, it's pretty ugly, man. You've completely lost that structure. Yeah, man. That's a tough look. It's definitely a tough look.
Yeah, it is.
Yeah, that's a tough 4-hour close, in my opinion.
I think we could chop around this level for a day. If we don't get a bounce and we're still sitting here like 12 to 16 hours from now, I would say that's definitely a sign of weakness.
Yeah.
It's a level that should hold.
Mhm.
Remember, no rips.
No bounces.
Yeah, remember, no bounces. All right, well, guys, we're just over an hour. I think that's it.
Yeah,
that's all we got.
We can go ahead and wrap things up. Should be a interesting day of trading and probably a weekend. I guess it's only Thursday, but I'm traveling to some family to see some family this weekend, so it'll feel a bit like a weekend tomorrow. Yeah, no, y'all have a great rest of your day. Appreciate y'all for being here, of course, as always. And make sure to hit that like and subscribe button if you haven't already. If you really enjoyed the show and the content today and you want maybe a bit more of an intimate look at kind of how we're positioning in the market and kind of how we're viewing things on a day-to-day basis, we do have links to some of our premium content in the description of this YouTube video, as well as the link tree of our Twitter. But yeah, y'all have a great rest of your day. Thanks again for being here, and stay safe. It's finally getting volatile out there again.
Mm-hmm.
Finally. And guys, if you want a free 1 month of our Discord where we post all of our trades, that code across the bottom of the screen, Twitter BB, will give you 1 month for free. So it's definitely worth giving it a try, guys. I know you love hanging out in the comments. If you like hanging out in the comments, you'll love hanging out in the Discord. So code is at the bottom, Twitter BB on our website. Link is in the bio. Thanks, guys.